Hello everyone, welcome to lecture 3 of module 8. In this lecture, we will deal with the typical problems related to cash flow analysis statement. Now, we will take up the full-fledged questions with regards to the cash flow statement, and we will prepare all the 3 statements together as the steps mentioned in the last lecture. First we take up the operating activities, then we take up the investing activities, and last we take up the financing activities to see how the cash flow statements are important financial statements used by the different stakeholders for decision making process. So moving in the same lane, we start with the problem as given in the question. In this question, we have to prepare a cash flow statement with the additional information in the question provided. So first we deal with the working notes so that you will be able to conversant with the things how to treat the different items under the cash flow statement preparation. So starting with, as you can see in the balance sheet given, there is accumulated depreciation on plant given 30,000 and 40,000 rupees in the question itself. 30,000 and 40,000. So we start from here. First we will prepare accumulated depreciation account with regards to the plant. As per the balance sheet figures, we know the opening balance of the depreciation is 30,000 and the closing is 40,000. So we will show by balance brought down as given in the question for the past year 30,000 on the credit side and the current balance on the debit side 40,000 rupees. As in the question, additional information is saying कि old plant costing rupees 30,000 with an accumulated depreciation of 18,000 sold for rupees 10,000. So this accumulated depreciation is to be treated in this account on the debit side. So we put here to plant account. So for you people to remember it, I am putting this amount I have taken from the additional adjustment given amounting to rupees 18,000. Now you can see that 58,000 is the balance of the debit side and 30,000 on the credit side. So finding the balancing figure of 28,000, this 28,000 will be transferred to profit and loss account by profit and loss account as balancing figure. Then as we prepared the accumulated depreciation on plant account, so the second we take up in the working note is with regards to the plant account. As given in the balance sheet, the opening balance of the plant is rupees 2,50,000 and 4 lakh is the closing balance. So first I brought down the balance on the debit side, to balance brought down amounting to rupees 2,50,000 and the closing balance by balance carry down 4 lakh rupees as given in the question. And for the adjustments, the first adjustment show that the plant costing rupees 30,000 with the accumulated depreciation of 18,000 has been sold for 10,000 rupees. So here by cash that we have received on the sale of the plant, that we put on the credit side 10,000 rupees. As we have already shown this 18,000 on the debit side of the accumulated depreciation. So by depreciation, that is 18,000 rupees, you can see that the 30,000 was the book value and 18,000 is the depreciation. So we are left with the balancing figure of 12,000 which has been sold for 10,000. So we will be suffering from a loss. That loss will be shown on the credit side by loss on sale of plant. This is 2,000 rupees after balancing the two sides of the plant account, we reached a figure of 1,80,000. This shows our new purchase of the plant as a balancing figure, so that the total of the debit and the credit side comes to rupees 4,30,000. Moving to next adjustment, that is regards to dividend. That is a single adjustment given in the question, but there is given another amount related to long term investments. So I am preparing long term investment account in the series, and long term investment in the question is given 1,50,000 in the opening, and closing investments are 2,40,000. So the long term investments account to balance brought down 1,50,000, and the closing figure is 2,40,000, and in the adjustment is given the long term investments amounted to rupees 50,000 sold during the year at a profit of rupees 10,000, mean the sale proceed we received on the sale of investment would be 60,000 rupees, and that will be shown on the credit side by cash sale proceeds of 60,000. So that 10,000 profit will be shown to profit and loss account as profit on sale of investment of rupees 10,000. So after balancing this account, we reach the figure of 1,40,000, which again show the purchase of the investments to cash. This is our purchase. Moving to the next adjustment, which is given in the question, is regarding the income tax provided during the year 15,000. As you have already discussed this concept in the last lecture. So we will be preparing provision for taxation account. This amount is also given in the provision for taxation account in the liability side of the balance sheet. Opening 15,000 and closing is 25,000. So we will be preparing this by balance brought down 15,000, to balance carried down 25,000. As I have shown you that there is an adjustment given regard the income tax provided during the year 15,000. This I am showing under the heading by profit and loss account. Again, to make it clear, I am putting the word adjustment or additional information, 15,000 rupees. So the total of the credit is 30,000 credit side, and on the debit side we left with a figure of 5,000, which means to tax paid during the year. This is our balancing figure of rupees 5,000. After making all these working notes with regards to the adjustment or the additional information given in the question, now we will move with the cash flow statement. So while preparing the cash flow statement, as the first step, we will compute the cash flow from operating activities. The first in the question given is the difference of the profit and loss account showing a figure of 50,000 and 90,000. So starting with this, we will put the first difference in P&L account, that is 40,000. The next is On the liability side, we can see the second heading of general reserve, which was given 25,000 in the year 22, and in the 23 this figure reached the figure of 40,000, showing an increase of 15,000, which means that the profit has been transferred to reserve. So that transfer to reserve will be added back to the profit figure, that amounting to rupees 15,000. Next is 10% debentures at rupees 100 each, showing a balance of 80,000, mean we have paid interest on debentures. So we will be showing here interest on debentures as an addition of rupees 8,000. Next is, as we have prepared the different working notes, out of that working note we have seen there is a loss on the sale of plant of rupees 2,000, that will be added back to here. Loss on sale of plant, that was given 2,000 rupees in the question, and then in the balance sheet we can see that the goodwill amount is showing a decrease of 5,000, mean that amount of 5,000 is written off. So next we treat that item goodwill written off as given in the question, amounting to rupees 5,000 to be added back to the amount of the profit. Then in the adjustment there is given the second adjustment, that the dividend paid during the year is 50,000. This is to be taken into account, and the dividend paid of rupees 15,000 will be considered here. Then after that we have accumulated depreciation. There we left with the figure of the depreciation, which we shown on the credit side as by profit and loss account. So I am writing down the accumulated depreciation of rupees 28,000. And then we also made a provision for taxation account, and the balancing figure was 15,000 left in the question. So that provision for taxation is to be taken into account here, that amounts to rupees 15,000. And then is, we have a sale of investment, and there was a profit on the sale of investment for rupees 10,000, this amount, but this is to be deducted. So we write down profit on sale of investment 10,000 here in the bracket, so that we can deduct it later on. After considering the profit on the sale of investment, we reach the figure of operating cash flow before the adjustments in working capital. This is our operating cash flow before working capital changes, that amounting to rupees 1,53,000. Now we consider the working capital changes. So adjustments in working capital are to be considered. As we know, any addition in the current assets will be deducted, and any decrease in the current assets will be added, and the vice versa for the current liabilities. So after taking the figures from the balance sheet, there is a decrease in BRs, bill receivable, that is amounting to rupees 10,000, and there is an increase in creditors amounting to rupees 10,000. These two figures will be added to this adjustment, and then we deduct amounts like increase in inventory 40,000. So I am putting it in the bracket. Then decrease in bills payable amounting to rupees 5,000. Now we reaches the figure of cash flow from operating activities which is coming to the figure of 1,23,000, and out of this we will deduct the tax paid in this question. So, I am deducting the tax paid, which was the balancing figure in the provision for taxation amount, that is 5,000 rupees. So, net cash flow from operating activities comes to rupees 1,23,000. Next is cash flow from investing activities. As in the question, we see that there is a sale of plant 10,000, that is to be added, and further we have a purchase of plant, balancing figure in the question 1,80,000. Then we have another sale of investments 60,000 and the purchase of investment 1,40,000. So, after computing this, we reach the figure of rupees 2,50,000. This 2,50,000 is our net, as it is a negative figure. So, it will be net cash used in investing activities. So, the last step is cash flows from financing activities starting with the amount given in the share capital. You can see the opening capital was 2 lakh and now it is a 3,50,000. So, it means the issue of share capital in the question. So, we first take it as issue of shares by the company 1,50,000. Then we have the next change in the unsecured loans from 1 lakh to 1,50,000, raising of unsecured loans by the amount of rupees 50,000. It is all again a positive item because it is an inflow. Then we have one adjustment of interest paid on debentures, which was a hidden adjustment in the question, and we have shown it in the operating activities under the heading interest on debenture 8,000. So, I am writing it down again here as a payment now. This is interest on debentures 8,000 rupees, which we have computed as 10% on the face value of debentures of 80,000. The next adjustment is with regards to the payment of dividend, which is given in the question 50,000. So, dividend paid is 50,000. So, after calculating the balance here, we reach the figure of 1,42,000. This amount is a positive amount which shows net cash flows from financing activities of the company. Now, considering all the figures we put on that amount column, we can compute the difference and we reach the figure of net cash or cash equivalents. This is after treating all the figures which we have shown, 1,23,000, then negative 2,50,000 and again a positive figure of 1,42,000. So, the balancing figure here comes to rupees 15,000, which would be my net cash or cash equivalent from the company's side. And in this figure of 15,000, we add cash or cash equivalents in the beginning. This figure is available in the balance sheet under the heading of cash, which is 30,000 rupees. I add this figure to the net cash or cash equivalent we just computed. So we got the figure of 45,000, which will be my cash or cash equivalents at the end. You can see this figure matches the amount of cash balance given in the balance sheet for end, which is again a 45,000. That's all from my side. I hope you understood the treatment of the typical items given in the cash flow statements after preparing the different working notes and taking it to the final cash flow statement. Thank you so much.